So the quick snapshot is company beat and raised across the board. But I gotta say before I really start giving too much cheer to NVIDIA, this is on a way softer guide, meaning that the guidance got completely reset. Numbers down in a number of areas significantly on a year-over-year basis, especially in gaming. Now, gaming did beat the expectation this quarter, but it was like 40-50% down from a year ago. This is straightforward. This is the inventory glut. This is the sell-off of the inventory. Question is are we at the end of that? And I think there's some speculation that we're getting closer, but I think we're still looking third, fourth quarter. And that's been a bit of a consensus, listening to Jensen, listening to Lisa Su, listening to Pat Gelsinger and other chip makers and CEOs talking in the last wave of earnings. Pat, data center grew 11% on a year-over-year basis. Pretty good, although it missed the guide. And so I was actually backwards on those two. I actually thought gaming would be worse than expected because that was kind of the feeling of the market, and data center would be stronger. And data center ended up being weaker, but still growing on a year-over-year basis. AI was mentioned a lot on this call. And by the way, NVIDIA stock is almost doubled from the bottom. I think it's more than double. And I think it's not really yet due to revenue ramping or margins increasing. It has more to do with the company is so well positioned to be part of this kind of next generation of AI. Yeah. It's got software lock-in, CUDA. It's got GPUs that are used in every public cloud and also used in most enterprises that are for any sort of training. And of course, the large expansion in inference. Company's got supercomputing as a service with its DJX offering. It has next generation gaming AI with its Ada Lovelace. And then, of course, it has the Omniverse, which, again, Metaverse is kind of ice cold, so people aren't talking about it. But the Omniverse, in my opinion, is the only actual application for Metaverse that companies are really thinking about using. This is designing, environments in the cloud for autonomous, digital environments, immersive digital environments. It could be construction sites. It could be for software or collaboration in the cloud. And the company is, able to kind of accelerate on all those fronts that as companies want to move more and more into AI, NVIDIA is going to be a big part of the story. And that's why I think the market's been so excited. And I think the more times you say AI, the more your stock goes up. I'm pretty sure there's a correlation there. That's not official. And remember our disclaimer here. Do not take anything we're saying as investment advice. Pat, they did have a better automotive number, which has kind of been interesting because it felt like the automotive business really sagged over the last few years. Qualcomm had grown this $30 billion pipeline, and while NVIDIA's pipeline has been stagnant around 11, but the revenue's almost doubled on a year-over-year basis. So I can only kind of wonder if that's kind of designs turning into shipments. But there's a lot of turning over in the automotive space right now, design wins going from company to company. NVIDIA's longer term is going to be interesting. It's never quite had the same automotive cachet from the time that it kind of lost its main public-facing relationship with Tesla. That was kind of its big moment. So, across the board, though, it was good to see foundationally the company beat. It raised a little bit on guidance. The numbers are much softer than a year ago. It's got a good, diverse data center offering, including not just the software frameworks, hardware, and of course, networking with the Mellanox acquisition. I'm overall still positive on it. I do think, Pat, one big risk with the ARM deal not being done is that there is a lot of hyperscale cloud and cloud companies that are building more and more of their own AI, ASICs. You're seeing it with AWS. I'm sure Microsoft and Google are going to continue to lean into that. And then, you will see more and more of that because of the democratized designs available from ARM and, partners like Ampere and others that will enable that for Oracle and other cloud providers.
Yeah, it's interesting. This one, I kind of want to separate myself from the stock market and what's, I think, actually is going on. Like, it's fun and dandy to jump on the Wall Street memes. I would say that it's like half right. I mean, I remember all the run up in NFTs in 2022. I am a believer in generative AI and LLMs, there's still going to be a very small portion of the market in the near term. And when I look at NVIDIA's long-term prospect, I mean, they're the only game in town for training. And I know there's other people who have it, but and there's some great technology out there. But if NVIDIA doesn't have 99% market share in that market of training, I would be surprised. That's not including CPUs, of course, because there's still a lot of data center training and inference done on processors. But it really is in a good position for that inflection point. You know, in a major way. I think the here and now, right? You've got the H100 out there and shipping. You've got Grace for HPC and some large scale models. You've got the networking with the Quantum 2, which, by the way, I wish they had picked a different name than Quantum, because that has nothing to do with quantum computing, but that's okay. We'll let that go. They're in very good position. The one thing, too, that was reinforced on the call was this new AI as a service, right? That's hosted by these cloud providers. You actually pay NVIDIA. The revenue goes to NVIDIA, and then it's fulfilled through these CSPs. I think a couple quarters ago they talked about, I think it's called NVIDIA DGX Cloud. That was reinforced a lot. I don't know why they needed to, but I think what they did is they threw everything they could at the wall to show how they are participants, if not the leaders in compute in this market right now. On the gaming side, I mean, there's so many things going on here. They have a 3,000 to 4,000 inventory rebalancing that they're looking at. The year-on-year compare is a tough one. And let's face it, there are a lot of people using crypto for NFTs and mining, although NVIDIA did their best to disable that. But I believe that was a big part of their market, and it cratered. The lack of AAA games, man. I mean, we should have 4 or 5 AAA games out there right now that are forcing you to buy a new GPU. There's a few of them, but they're really not there. I think Ada is off to a great start. It's exceeding. The company said it's exceeding expectations. It was so funny. I think it was the 4080 maybe as a card. People just said there's no way that's going to sell. Value proposition sucks, and that thing is selling like freaking hotcakes. Sequential. I very rarely look at sequential, but I felt like I had to do it for this one. Was up 16% on gaming. So, anyways, up until a competitor comes in and knocks this company off on the gaming side or on the AI training and inference, I believe I don't see any indications that it won't continue its run. Now, competitively, I mean, you have startups like Grok and TensorTorrent, right? You have Intel, you have AMD. They are pissed that they're not getting a lot of this money, and they're coming after it. So NVIDIA is going to have to, it's essentially NVIDIA against the world. Not to mention, at AWS, you have Inferentia, right? You have Trainium out there. And while Google hasn't used its accelerators, I think, as much as AWS has, Google has its own accelerator out there, right? In fact, it was the original AI accelerator by cloud folks. We don't know what Microsoft is up to. We have a pretty good idea they're getting off of FPGAs for some of their acceleration.